Hello, you wonderful people. Welcome back to another episode of Market Bites. I'm joined by Josh Gilbert. Josh, how you doing, mate?
Yeah, I'm okay, Sam. As the listeners might be able to hear, I'm a little bit under the weather. I've got a serious case of man flu, and it is real. Okay, for any of those people out there, man flu is a very serious form of flu, and I've got it. Luckily, I'm past my peak, but I'm still not in great shape. But that's me. How about you, mate? How you doing?
Yeah, not too bad. And I sympathise. Man flu is not an enjoyable experience. So I wish you all the best and
Thank you.
appreciate along with our listeners that you joined us here today. Obviously, Wimbledon is going on, so I've been enjoying that. We're into must be the quarterfinals, semi-finals at the moment. I've got a little bit of a bet on Djokovic and Sabalenka, so been watching the tennis a little bit more closely. It's probably going to end up being Andreeva and Alcaraz that will win, but it's all about the journey, isn't it?
It is.
Let's get into some predictions then for this podcast. I think it's fair to say that predictions this year have been tough. It's been a very hard year to predict. And if you're looking out in a few months down the road or for 6 months, I think you do need to take things a little bit of a pinch of salt. But who are we to stop a tradition? We do some at the beginning of the year. We do some at the sort of 6 month point as well. So let's discuss it all. Are you ready for that? And also for our listeners that maybe haven't been completely up to date with everything this year, what stood out to you so far?
Anything but a quiet 6 months, I think, wasn't it? That first half. Certainly probably kept me and you, and I'm sure our other analysts at eToro on our toes. I mean, I think particularly for me here in Australia as well, because it would be a case of, the US sort of kind of coming to the end of its day and then us waking up and Trump usually saying something a bit stupid and usually seeing you mention it and then me being like, okay, great, well, that's going to keep me busy for the day or for this morning at least. So that was certainly interesting, right? You're waking up and, sometimes people like a bit of a slower morning, a nice coffee to start the day, and then you kind of read a few emails. Not this year. Absolutely not. You've been straight into it. Well, I have anyway. So anything but quiet that first 6 months. I mean, locally here, the RBA started cutting rates, cut the cash rate twice. Expected to sort of continue cutting rates in the second half of the year, although they did surprisingly keep rates on hold. Yesterday, we obviously had the surprise from Donald Trump shocking markets with tariffs, which obviously stoked fears of this full-blown trade war. It sent stocks lower, drove investors to safe havens. Gold hit a new record of over $3,500 an ounce. VIX reached its highest level in 5 years. I think one of the highest levels ever in history as well. The S&P 500 gained 5.5%, which, when you take into account that it fell as much as 19% from the start of the year in April, we had a V-shaped recovery that I don't think many would have predicted, right? And if we look at that chart, you are the chart man here, Sam, but it's a pretty nice chart, that V-shaped recovery, that bounce.
Absolutely.
And as I say, not what many would have expected. And then, looking a bit closer to home for you back in Europe, we obviously had the ECB and the Bank of England. They continue to cut rates as well. That helped drive sort of equity outperformance. So at the start of the year, we had European equities really outperforming the US the first time in a long time. And the defensive stocks, they were the sort of the clear standout winner in Europe in the first half of the year. So I think those are probably the main things that really stood out to me. Obviously, we had a new all-time high for Bitcoin in that time as well. And volatility through oil, I'm sure we've missed so much, but given there was so much that went on, I think those are probably just the main points that I have off the top of my head. So
Yeah, a good summary. And it just goes to put into perspective how crazy this year has been. And it's funny, isn't it? It's literally a 24-hour job, our analyst team. And luckily we have you out there. We got Brett in America and everything in between. So it helps to stay on top of things, because you go to sleep, you wake up and there's a new headline. And that really has been the case for pretty much the whole 6 months and 1 week of the year. Let's get into the first prediction then. First, we'll talk about US equities, and maybe we can just start by chucking things out there that people should maybe focus on so they can also make their decision. We've got earnings season, which is just around the corner. That's going to be in focus very soon. You could argue, Nvidia's last earnings report was actually a bit, one of the key drivers for the market recovering. It showed that growth was still there, demand was still there, and you look back in hindsight, which is always 2020 vision, but it's not far off, the low of the market. And actually, I think it gave people quite a bit of confidence that, okay, you know what, things are still pretty good. And then we recovered since then. Yes, you could argue it's, the extension of the tariffs and whatnot that helped things as well. But I think it's a fair point to mention. So we've got the earnings season coming up. Focus on that. We also got the tariff deadline, which has been moved to next month, but Trump has said he won't move it again. Do we believe him? I don't know. Yesterday there was a post that he did on Truth Social where he was saying someone did a study into the tariff impact on inflation and there isn't going to be any. Whether we believe that, I've never heard of the guy that has run this study, but Trump seems to love it, believe it, and of course he's called out the fake news for even suggesting there would be any inflation because of it. If he does become more aggressive on those tariffs and we do move lower, is that then an opportunity to buy the dip like we saw with that 15, 19, 20% dip, across different equity markets, maybe? Or is it actually the start of a longer move to the downside? We'll have to wait and see, of course. You've got underperforming sectors like healthcare. Do they do better now that their valuations are more attractive? You've had certain sectors that have done incredibly well over the first 6 months, some that haven't, and healthcare is one of those. Do people see opportunities in Europe and China again like they did at the beginning of the year, or they had their turn now? Did we actually just sort of meander through for the next 6 months? We'll have to again wait and see. It's quite interesting, I guess, when you sort of, to ask people where they would want to put their money. Is it still the US or is it now other regions? And, we did the retail investor beat and people are slightly less positive on the US and they're more positive in Europe and China than they had been 3 months before that. It'd be interesting again to see what they say in 3 months. So do we get any interest rate cuts from the Federal Reserve? Do we get 2? Do we get 3? The market seems torn between both of those. Does it even matter what Jerome Powell says anymore? Who's going to be the next Fed chair? That's important for us to understand. If they're super dovish, great for the market. If they're not as dovish as maybe the market wanted, not as, the market might struggle to push higher because of that. With those factors then, Josh, what do you think? What do you see? How are you sort of drawing it up for your prediction?
Sounds like it's going to be another chaos 6 months, I reckon, Sam, by the summary you've just given us there, mate. Look, I think, as you mentioned, I think earnings are going to be key. I really do think that's going to be the focus here, because maybe we push aside some of the sort of the tariff noise. I think we maybe get a better view and a better picture of that. We're starting to see that already, I think. Again, we know already that a lot can change, especially when Trump's in charge. But, earnings growth remains, I think, a tailwind. Markets expect 10 to 12% earnings growth for the S&P 500 this year. Double-digit earnings growth, that shouldn't be underestimated. That's a solid number. The bar is obviously going to be high, but the fundamentals are pretty solid. And I think that's the real positive that I think investors should take away. The US consumer has held up pretty well. Corporate earnings have been strong, continue to be strong. Tech, particularly AI, that continues to be a big growth engine and a big driver as well. And I also think a big factor as well is that I still think we're still seeing a bit of cash on the sidelines. I don't think investors are fully positioned here. And I think that, you mentioned about dips coming in. I think that if dips come, I think that investors are willing to sort of move. I mean, I'm certainly one of those. I think in terms of the run that we've had and the move higher that we've had, I think there's been opportunities to take profits on certain names. And I think that we talk a lot on the podcast about, there's stocks that we look at, and if there's opportunities arise, we will certainly look at them. And I think that will be the case as we go into the second half. I don't think it's going to be one way. And as we know, markets don't just go up. Just because we've sort of maybe seen some of that volatility in the first half of the year subside, that doesn't mean we're not going to get any in the second half of the year that causes markets to maybe still pull back slightly. So it's certainly worth building that watch list out, right? You're putting limit orders in, having stocks that you're sort of really keep an eye on. And I think that means the playbook is staying nimble and sort of maybe lean into the volatility if we get it, that might open up new opportunities. So I think that's quite important, staying nimble as well. The Fed, well, look, I think they're going to be really important. Obviously, markets are expecting cuts, but I think the risk is that they don't. You mentioned 2 or 3, but I think if we went back to the podcast at the start of the year, me, you, and Neza, we had a very serious conversation about whether the Fed will cut or not. And I think there was a big debate on whether they would or whether they wouldn't. And I think a few of us said that they wouldn't, and we're still at that point where we're still sort of haven't seen that yet. So the worry is that inflation proves to be sticky. If it holds up through the US summer, we could be looking at a higher for longer interest rate environment in the US, which could keep a pressure on rate sensitive sectors. Think real estate, think small caps, but also could put tech under a bit of pressure as well, right? Could put those sort of risk assets under pressure a bit more if we don't see those cuts sort of coming through. I think other risks as well, tariffs coming back into focus, weakening global trade, of course, geopolitical tensions coming back to the fold as well. That's going to be something that I think will play a big part in the second half of the year. I know that, we seem to be out of the woods in terms of that for now, but, I think the biggest thing for me is that what surprised me so much this year is investors have taken a lot in their stride.
Yeah.
Particularly when we look back at, some of the geopolitical tensions we had, a couple of weeks ago, Middle East and Iran and what we've sort of seen happening is, on the Monday when I woke up, oil futures declined, S&P, futures declined. By the end of the day, we were flat or even, potentially higher. And I think that just goes to show what an investor has had to deal with over the last couple of years and what they've taken in their stride. And it just shows that, okay, this is kind of a new normal. This is the new normal for markets now. This is what we've come to expect. And I would expect to see something similar in the second half of the year where investors take things in their stride. If volatility hits, they'll sort of buy dips. But I think also at the same time, investors are kind of pretty aware that actually being out of markets is a big risk. Not being invested in a market, that has moved with as much power as it has from that sort of low that we had in April. That's the risk right now. Gaining as much as we have from that low is, if you've just stayed out of markets, you've missed some, fantastic returns over that time.
Yeah, absolutely. Well summarised. And before we give our prediction, just a quick shout out for anyone that's watching on YouTube. Most people do listen via the podcast, but if you're on the YouTube, you like the content, please do give it a like. It helps with the algorithm and all of that jazz. We appreciate it, and we want to keep producing content for you all. With all of that said, I mean, one thing to note, we had 20% move and more lower in the Nasdaq. The move you mentioned, but lower in the S&P 500. It's very rare that you get 2 of those kind of moves in the same year. So I think that's one thing to note. July, we've had 10 positive in a row. So you'd imagine we can kind of follow that. August, seasonality, in September, not the most amazing. The VIX typically does okay, actually, in August. So I feel like we're just going to follow seasonality into the back end of the year. And we're going to finish pretty much in near its sort of historical average. I think we finished sort of 10, 11, 12% up. I think there'll be another half decent dip that people get involved in. And as you said, there's money on the sidelines there, and you've got to be involved at the moment. If you left April alone, like a lot of institutions did, they need to deploy capital. So I think these dips get bought. Black swan events obviously can happen. You don't know what they are, hence the definition. But I feel like with everything we know right now, I feel like we're going to finish up about 10% for the year, 10, 11%, Josh.
Yeah, and I think we will get I feel like there's a black swan event sort of coming. I feel like something's going to come in the second half of the year. I've called it now. But I think something comes, and I think it shakes markets. Something like when we had the Japanese, carry trade. That sort of, I feel like something like that, something that, people aren't really talking about. That was something that there was murmurs about it, but it wasn't really much. And then one Monday came and bang, we kind of,
But then by Tuesday we're positive.
Exactly.
It's incredible, isn't it? Incredible.
So I think we'll get something like that, and I think it will shake markets a little bit. And I think, as I say, that kind of will be the new normal, and we'll sort of be back to where they are. But I think, as I say, I think the focus point will be, really going back to those earnings. And I think the biggest thing will be, Mag 7, right? They've sort of driven markets for a long, long time. We've talked about breadth of markets and things like that. We've obviously had Tesla struggling, this year, Apple, really not coming up with a lot on the AI front, Alphabet coming through with Gemini, but again, it's really sort of not hitting the pace at the moment. And I think for me, it's a case of, okay, out of those names, what are they going to do next? NVIDIA is really the one that stands out. Microsoft maybe as well, standing out from the perspective of AI. Amazon, leading in cloud, AWS, retail business doing pretty well. Obviously, we've got Prime Day on at the moment. Do you think we see all of the Mag 7 finish positive for the year? Because it feels like it could be a tough ask from where we are right now.
Yeah, no, it will be a tough ask, mainly because Tesla's down 26% at the moment, and we're over halfway through the year. So that's got to have a bit of a recovery to get positive. Apple's also down 16%, Google's down 7%, and Amazon's completely flat year to date. So Microsoft, NVIDIA, Meta flying, doing really, really well. The other four not so well. And of course, with Tesla, it can have weeks where it does that. It can move 25% in a week and finish the year positive. And actually, I think this time last year, and maybe a few months down the line, heading into the election, we were down similar sort of numbers. And then actually, for the back end of the year, Tesla exploded and went higher. So I think Tesla's got the potential to recover. The issue, I guess, at the moment is there too much noise around it at the moment with Musk and his political aspirations. We saw the market react unkindly to that over the weekend, and then Monday we saw it gap down. However, is there then going to be a dip that is big enough for retail and everyone else to get involved in the company? Because there's still a lot going for it. NVIDIA very, very close to becoming the first $4 trillion stock. Microsoft not far behind it. I think Amazon has just had a golden cross, which is a technical pattern. The last time it had that, Amazon, was May 2023. It went up 100% over the next 23 months. So, things look okay for some, not great for others. What's your thoughts?
Yeah, Tesla, I think it's going to struggle for me. I think just so much noise around it, as you say, Musk and, the political side of it. He just got, and I know he's done it for years. And I know he's, we talk about sort of like, okay, does he have too many fingers and too many pies? And okay, you can say, all right, he's done that for years because he has had SpaceX. He's always had sort of everything else, but it just feels like he's more distracted than ever. And I think it comes at a time when deliveries are really poor. They're not sort of, actually, Tesla just isn't performing around the world right now. So it's like, okay, fine. If Tesla is firing on all cylinders, no problem. Go and do what you want. Go and, launch rockets if that's what you want to do, because your business is doing great. But Tesla shareholders are like, mate, please, we just lock back in and make some nice cars again. Like, seriously, just make them great and make us, stop picking a fight with the most powerful man on the planet. You were friends with him, and that was all well and good. Why are you picking fights with him? So I think that's going to be a question for a lot of shareholders, and I think they'll lose a bit of patience over time. So I think a lot will come down to, deliveries and earnings, but also just goes to show, right, that it's a lot more than just that. Even if they were doing numbers, the fact that he may be potentially opening up a new party sends the share price down like 6 or 7%. There's so much more that goes to it than just those sort of fundamentals, right? And again, I just there's lots of short-term headwinds, but I think long-term there's lots that remain exciting. Robo-taxi, the AI side of it, autonomous driving, but these are all long-term plays. I don't think any of these are really going to prove to be short-term catalysts, which is the worry. I think in terms of Mag 7, I'd like to go out on a whim. I'm going to keep my eye on an end of year burst from Alphabet. I do like it. I do like it. It's the cheapest Mag 7 stock. A great valuation. I think it trades under 20 times forward earnings. Could even be less than that now. So it's the cheapest of that. Again, you don't become cheap without a reason. They've got a bit of an overhang from some regulatory issues, DOJ. Sort of hurdles as well. So the potential of, Alphabet obviously being broken up. But I think what we're seeing from what they're doing in AI, I think is really positive. And the second half of the year could be really positive, pivotal as it looks to sort of monetize Gemini. Gemini is, I think, becoming a really great product. For a long time, lots of question marks over, okay, Google's going to be replaced for ChatGPT. We don't need to now, because when you Google in ChatGPT, it gives you Gemini. So it's like, well, why would I go to ChatGPT when I can just Google it? So I don't personally use ChatGPT as like a Google. I use ChatGPT to help me with tasks and those types of things. Yeah. I still use Google to Google and get the answer. It's just the way I always have done it. But then you add in search, YouTube, cloud, YouTube Shorts, those types of things, and everything else, those other bets categories like Waymo and things like that. I just think it's got a lot there, and I think it's undervalued by the market at the moment. So Alphabet will be a name that I think I'll certainly be keeping an eye on, and I could see it having a bit of a run into year end.
Yeah, I'm with you on that. I mean, I do feel there is a bit of value there. Tesla, I think, gun to my head, I feel like it's not going to finish the year positive. So back to the original question, I don't think all Magnificent Seven do. Maybe 5 out of 7 finish positive. I actually did a poll on eToro 2 days ago, Monday. Maybe it was Sunday, actually. I don't know the exact time. But I asked people, do you think this is just a minor blip? Or do you think it's a bigger issue? 44% minor blip, it's just noise. 44% also said bigger problem. 12% undecided. So, it just goes to show that people are not as positive as they have been. I mean, this is a darling retail stock. Remember, this is one where people were just so bullish no matter what's going on. And the fact that people are sort of waking up and being like, you know what, this is a bit of an issue. I don't know. It doesn't fill me with confidence. So yeah, I'll go 5 out of 7. I reckon. I mean, you straight off the bat, do all 7 finish positive as you see right now?
No, I don't think Tesla will finish positive. And just going from what that survey tells us there, that poll tells us, I think that sort of investor sentiment is waning a little bit, right? So I think do you get people buying the dip? I don't think so.
Well, that's it. That's the thing for me, that if it does go down significantly more and becomes just a really good opportunity, it can recover so quickly.
Yeah.
So I think it does go lower. It's just how big that dip is that people want to get involved in. And we'll have to wait and see. Next subject then for us is oil. And by the way, the hardest to predict, I reckon. I would say. I mean, recent geopolitical events have led to it soaring higher on one day, but then dropping just as quick. $60, $65, such a key zone technically for a guide as sentiment. We had a big trend line. It tried to break above that on a Monday a few weeks ago, came back lower, moved down again. And you know what? Maybe that zone I'm on about is just kind of where it finishes the year, and there's an awful lot of noise in between that. Is China demand, OPEC cuts, things to consider. Also, oil, the price of WTI crude oil and CPI, when you line them up against each other, is a pretty good correlation. So one to keep an eye on there, just from an inflation standpoint. If we think about tariffs as well, are there going to be an increase in transportation costs, or does a global slowdown actually offset that? I mean, Josh, I don't know. Honestly, help me out here, because I find it tough. I mean, maybe it's just better to look at energy stocks instead.
I mean, you're spot on. It is the hardest call, right now, I'd say. I think you touched on all the key points really around sort of price action, China demand, OPEC, and, of course, you've got those geopolitical tensions as well, right? And I think that will be the key driver in the second half. And, if we see those flare-ups again, then you're going to get volatility in that price. I guess to answer the question in terms of energy stocks, I guess the play with energy names is that diversification element, right? You're not fully then just sort of moving into the oil price. You're not just sort of, hoping that, okay, if oil goes higher or lower, you're getting exposure to that sort of broader mix, right? So a lot of companies will have natural gas, they'll have LNG, it'll be infrastructure. And in some cases now you even got those renewables in there as well. So it's a bit more of a broader play. And also, a lot of these companies will tend to return serious capital as well to shareholders through sort of dividends and buybacks and those types of things. So I think that's also something to remember. You're probably going to get a bit more cushion, if you like, from the volatility. So, I think oil will stay volatile. It's going to be hard to really, I think, finish the year above, 70. I'd struggle to sort of see that happening unless you get, something from a geopolitical standpoint really flare up and it stops that flow of supply. And as I said earlier, when we had that sort of reaction, a couple of Mondays ago, it was that instant spike in oil futures. And then it was like, okay, actually, is this going to have an impact on supply? Well, the overarching theme was that no, it's not, until we actually get something that stops supply, and supply kept moving forward. So, I think that's something to remember. But I also think from a commodity perspective, let's also not forget about, gold as well, right? Because I think the uncertainty that we've seen this year, I think it remains in favor. I think if we had a look, our retail investor beat survey, investors were saying in that they're looking to allocate more to gold. And it's no wonder, it's one of the best performing assets this year. So could we see more record highs from gold? I think hard to maybe keep challenging record highs for gold, but central banks keep buying, retail investors keep buying. If there's demand on the market from a jewelry perspective, that's a big part of the market as well. So I think gold will be an interesting one to keep an eye on. I think certainly the safe haven demand there will be interesting. That's something to certainly keep an eye on, I'd say.
Yeah, absolutely. People on YouTube or Twitter or whatever, let us know your views for all of these predictions, and also this one. We're gonna get very specific here and give an exact price for where oil is going to finish the end of the year. Of course, just for fun, because we're stressing this is very hard to predict. And let's make it a little bit more interesting, Josh. Let's do a Nando's lunch on it, and I'm gonna go for $62.
We're gonna have to line up this Nando's lunch either in Australia or in the UK. Probably the UK. It's probably better over there. And we'll do a digest and invest at the same time.
Yes.
Okay, $62 for you. I'll go and be strategic. And I'll just say 65. You can take the lower, and I'll take maybe the higher from there. So
yeah, I think that's fair. I mean, I guess you could have been really cheeky and done $62.01, couldn't you? But it gives us a
little middle gap. Be fair about it.
Yeah, but let us know in the chat where you see oil prices finishing and reasons why. I think that's fair.
And
next up for us then,
Nando's as well.
Yeah, exactly. Yeah, you get wrong Nando's for us free for a year, please. Next, crypto. What are your thoughts on the moment? You mentioned Bitcoin had hit a new all-time high this year, so that's a positive. I also think its resilience this year has been impressive for me. We're flirting near all-time highs at the moment. Some assets have done okay. Ethereum's recovered a little bit more recently. XRP has done okay to sort of stay in and around flat for the year. Solana too. So things actually don't look too bad. I guess maybe they don't look as good as some people maybe would have thought heading into the year. I think that's fair to say. So are we happy with the current US administration and what they've said, what they've done with crypto? Do we get an alt season? Do we not? Is it even a bad thing if we don't get one as well? I think that's a worthwhile question. More and more companies now have Bitcoin on their balance sheet. That simply has to be a good thing longer term. ETF flows have been solid, certainly viewed when you zoom out, you look at the grand scheme of thing, everything perspective, they've been impressive, especially compared to other assets or other ETFs of around the globe, and also from their inception. If you were to take gold ETFs at the same point, it's incomparable. Bitcoin has massively outpaced that. So again, that's pretty positive. So I don't know about you, but I feel pretty good about things right now.
Yeah, I think it's hard to not be positive, I think, on crypto at the moment, given those sort of catalysts that you've just mentioned. I think if you start with the US administration, clearly we're going to get a much more crypto-friendly administration. We know that. The president launched a meme coin. So they we forgot to put that in our H1 review. So there's that. We've obviously got an SEC chair now who is also more crypto friendly. And I think that will, again, this is not going to happen overnight, but the regulatory guardrails of, allowing companies to own Bitcoin, allowing that, digital assets to be, better used, I think, in sort of everyday life and worldwide use cases. I just think that it helps retail investors, ease of access to owning it, these types of things. I think that's only going to really help. And I think the adoption of crypto is still so low. We talk about it all the time, right? We talk about crypto. We know crypto. People listening to this podcast will probably know crypto. But I think that the people that don't is such a big part of the world that we've still got that to come. It's only a very, very small number that still does it. I think even I had a look at the global retail investor beat, and one of the questions was, do you own crypto? And it was a massive number. It was over 40% that still didn't own crypto, which was so surprising to me that I just had kind of assumed that a lot of people just allocate to crypto now. So I think from a catalyst perspective, you talk about sort of retail investors, I still just don't think that they're fully on board. I don't think they're fully invested anywhere near yet. So I think we've still got a long way to go there. And I think regulatory, frameworks certainly help with that. I think the thing for me, I think that's been maybe the crucial shift, this time around has been who is buying. You mentioned about companies owning it on their balance sheet, publicly traded companies, they're adopting Bitcoin. I think this is the first time we've really seen institutional participation really become front and center. Multi-billion-dollar allocations. We've got retirement funds. You've got sovereign wealth funds in the UAE, all starting to sort of gain exposure. ETF flows have been massive. So I think it's only adding to this sort of demand where we're seeing this chase, if you like, to a fixed supply. And that is really key. It's a fixed supply. Not everyone's going to be able to get it. There's not enough Bitcoin in the world for every millionaire. So that's something to sort of remember. And I think also outside of Bitcoin, you mentioned alt season. I think when we talk about alt season, I think for me, those sort of legacy coins, dino coins, I think we'll continue to see investors waiting for that to sort of come through. But I think for me, I just don't think we'll get it. I think the assets that have already done well, I think those will be the ones that do well. If we do get an alt season, it will be I think it will be the ones that have already done pretty well already. Some of the assets I think are lagged behind. I don't think are going to start suddenly doing well. So if you look at maybe top 30, 40, top crypto assets, a lot of those assets will probably be there because they've done really, really well this year. And I think just because something has done well so far doesn't mean that it won't necessarily carry on. Look at Nvidia, as a prime example of that. But I think, as you mentioned, the catalysts are stacking up for Bitcoin. And I think once we see less uncertainty in markets, certainly if we get rate cuts coming from the Fed as well, I think we continue to make a leg higher from here.
Yeah, I'm with you. I think all very, very good points. And it does feel, or it is, isn't it, that this year has been a lot of institutional buying for the first sort of time, and it's leading the ETF flows and all of that. So with all of that said, let's do a prediction. And I appreciate it sort of pie in the sky here kind of stuff, trying to predict an exact number. But I feel 120 end of the year. I think it will go higher, then drop down a bit into the back end. I think 120 for me feels like with everything I know right now and the grand scheme of things, the environment, headlines that could come, 120 I go with. What you in and around there? You higher, you lower?
Yeah, I would. I mean, not to sit on the fence, but I would say something similar. I'm not sure we're going to push. I think you need a big catalyst as well to sort of get to that price. Once you obviously get to a record high, which we did in May, you then move into price discovery. That's when you need your catalyst. We've struggled really to move higher from those all-time highs and to sort of sustain that. Usually Bitcoin stays at its all-time highs for like a couple of days, right? So I
Yeah.
think you need a big catalyst to come in. What that is, I'm not 100% sure. Maybe it's another buy from a big corporate business. Maybe it's more regulatory frameworks coming into place. Maybe it's huge ETF flows that we keep seeing. Maybe it is rate cuts. So I think I would agree around that sort of 120 mark is quite similar, but I'm not sure we stay there for a long time unless, as you say, those catalysts keep pushing us higher. But I think that's a fair number to put on by the end of the year.
I think so. Everyone let us know in the chat as well. Get your Bitcoin predictions or other crypto asset predictions in the chat. Just to wrap us up for this week, Josh, I've got some quick fire questions for you. You ready?
Okay. Yeah, let's go.
Okay. If each of these markets drop 10% overnight, which would you be most excited about buying? Would it be Bitcoin, S&P, oil, gold, or Tesla?
Bitcoin.
I think I would say that too. I think obviously it depends on the headline, doesn't it? But if they all drop 10% overnight at the same time, I think I'll go Bitcoin too. Will Ethereum hit an all-time high this year, in your opinion, with everything you know right now?
No.
Which will be the first stock to hit $4 trillion market cap?
Nvidia.
Do the Fed cut more than twice?
No.
Will Jerome Powell be the Fed chair on December the 31st?
Yes.
Yeah, I think he will as well. I think he's got until May next year, hasn't he? I don't see him quite getting pushed out, but we'll wrap it there. Josh, as always, it's a pleasure. Thank you everyone for listening as well. Hope you enjoyed the episode. But Josh, cheers, mate.
Thanks, guys. See you all soon.
Take care.